What's up everybody? Today I will teach you the ICT silver bullet strategy. The concept will be the same, but I will try to teach it in a better and an easy way. If you are an old viewer, you would know that my silver bullet strategy is a bit different from the others like Casper SMC, T-Trades, and even ICT himself. What ICT does is, he makes it too complex by saying find a fair value gap after a liquidity sweep. So if you can find a liquidity sweep, you just don't need the silver bullet strategy. Finding a liquidity sweep is the most difficult thing to do in trading. So I won't use the liquidity sweep concept in my lecture, and I will try to keep it as simple as I can. Also, Casper SMC makes it too easy by saying find a fair value gap and get an entry. You can't just get an entry after finding a fair value gap. There are some things that you have to keep in mind. So let's jump straight into the lecture now. And the first question that comes into your mind will be, what is a silver bullet strategy? So the silver bullet strategy is a time-based model. Okay, it is a time-based model. What do I mean by time-based model? So in silver bullet strategy, you have to trade within certain time. You don't have to look at the charts all day long. You just have to wait for specific time windows, and then you have to trade. And what are those time windows? So ICT uses 3 time windows, but I uses 2, which is 3 to 4 a.m. New York time, and the other window is 10 to 11 a.m. New York time. Okay, New York time. My favorite is this 10 to 11 a.m. New York time because I get so many entries during this time window. Okay, so it is a time-based model, and you have to trade between 3 to 4 a.m. and 10 to 11 a.m. New York time. What you have to do is you have to change the time zone to UTC New York. This is UTC New York. Okay, and then you have to draw lines at 10 to 11 a.m. and 3 to 4 a.m. like that. Like this is your 10 a.m. draw line here, and then other at 11 a.m. and then you have to trade during this window only, not at any other time. Okay, you just have to wait for these time zones and trade during this window. Now what do I have to look for during these time windows? Like, what is the setup that you have to look for? So in this time window, you have to look for a fair value gap. Look for a fair value gap or FVG. Okay, and I use the 5-minute time frame. Okay, so find or look for a fair value gap on the 5-minute time frame. Now what is fair value gap? So let me show you what is the fair value gap. You can see, let's suppose this is a 5-minute chart. Each candle is a 5-minute candle, and you can see this gap between the bottom of this candle and the top of this candle. Okay, this gap, this is called the fair value gap. Okay, let me color it black. This is your fair value gap. Now here also you can see there is a gap between this candle and this candle, the bottom of this candle, the top of this candle. This gap is called the fair value gap. So what you have to do during this time window is that you have to look for fair value gap on the 5-minute time frame. Sometimes I use 3-minute and 1-minute also, but my favorite is the 5 minutes time frame. Okay, what is FVG? So let me write it. I showed you, it is the gap between the bottom and top of candles. Okay, it is the gap between the bottom and top of candles. Now is FVG alone enough for entries? So it is a big no. Okay, it is not enough for entries. There are some other things that you have to look for. Only finding an FVG during this time window won't do it for you. And the other thing is SMT divergence. Okay, you have to look for SMT divergence. And now what is SMT divergence? I will teach you in a while. Okay, you have to find a fair value gap, but before that you have to find SMT divergence. The fair value gap will only be valid if there is an SMT divergence. Now I will teach you what is SMT divergence. There are different kinds of SMT divergence. Okay, Let's suppose this is a 5-minute chart of the US 30 Dow Jones, okay, and this is a 5-minute chart of NAS 100. So we will find an SMT divergence. So one type of SMT divergence is this one. You can see that these candles are going down. These are the down closing candles. You can see this is the swing low. Okay, I have drawn a line here. This is the swing low, and the price then went up. Now US 30 and S100 are SMT pairs. What is SMT pair? SMT pair mean that if the price of US 30 goes down, then S100 also goes down. If US 30 goes up, S100 also goes up. But here you can see that this candle was the low and then the price went up. But here on S100, you can see that this low was swept by these two candles. Okay, so we got an SMT divergence. What is SMT divergence? When one of the pair sweeps the lows or the highs and the other don't, we get an SMT divergence like we got here. You can see this nice 100 swept this low and US 30 didn't sweep this low. So we got an SMT divergence. Now these are the SMT divergence of consecutive candles. Okay. Now there is another kind which is based on the previous swing highs and swing lows. Let's suppose there was a previous swing low on the 5-minute. You can see that the price went down and on US 30 it swept this low. Okay, now the same price action is of NASDAQ 100 because these are the SMT pairs, but what is different here that this low was swept here and now you can see this low isn't swept, so we got an SMT divergence again. Okay, I call it SMT divergence, or ICT calls it SMT divergence because it gives you something like this. Okay, this greater than sign. Okay, sometimes you get this sign and sometimes you get less than sign, so we call it a divergence. So you can see that here the divergence was between consecutive candles, and here the divergence was between previous swing highs and previous swing lows. Okay, so these are the two types. Okay, sometimes we will use this one, sometimes we will use this one. So silver bullet strategy is a time-based model. You have to trade between 3 to 4 a.m. and 10 to 11 a.m. New York time. Okay, and then during these timings 3 to 4 a.m. and 10 to 11 a.m. you have to look for a fair value gap on the 5-minute. You can also look for the fair value gap on 3-minute or 1-minute, but my favorite is 5-minute. Okay, then what is fair value gap? It is the gap between let me show you again. It is the gap between the bottom of this candle and the top of this candle. Don't count this candle. Okay, leave this one. The gap between this and this is called the fair value gap. Now what's the next question? Is FVG alone enough for entries? No, you have to look for SMT divergence first. What is SMT divergence? It is the divergences between SMT pairs. Okay, as I already shown you. Now what are the important SMT pairs? So let me write it here. The important SMT pairs are in this case we are using US 30, okay, and NAS 100. Okay, we are using these two. Other SMT pairs are, you can also use NAS 100 and SPX 500. Okay, this is another pair. Now in forex you have got euro and GBP. These are also correlated pairs. If the price of GBP goes up, euro also goes up. In crypto there is Bitcoin and Ethereum. Okay, there is Bitcoin and Ethereum. Now there is inverse relation also, like there is inverse relation between euro and DXY. So they are correlated pairs, but they are inversely related. If the price of euro goes up, DXY goes down. Also there is Australian dollar and New Zealand dollar. Okay, these are also correlated pairs. So these are some of the important pairs that I use for my tradings. Okay, and I find SMT divergences between them, and then I look for fair value gaps. Now before showing you an example on the chart, I will teach you one more thing, which is handles and ticks. It's important because we use it for our targets and most of the ICT traders don't know what is handles or ticks. So let's suppose you are getting into your longs at 34,795. We will mark this level. So what will be the 10 handles from this point? ICT uses 10 handles for his target. Okay, so 10 handles will be from 795 to 805. This will be your 10 handles, but with my strategy you can target 30 handles. Okay, so if you have entered at 795, your target will be 34,825. These are your 30 handles. And what will be the stop loss? The stop loss will be below the recent swing low. If it's 5 handles, 1 handle, or 10 handles, doesn't matter how much handles, but the stop loss will be below the recent swing low or swing high. And what is ticks? So there are 4 ticks within a single handle. Okay, so if your target is 30 handles, you can multiply it with 4 and that will be your ticks. Now I will show you an example on the chart, and it will summarize the whole lecture and will clear your mind. So this is the US 35-minute chart. The first thing that we have to do is we have to draw a line at 10 a.m. New York time and 11 a.m. New York time. This is our window to enter into our trade. Okay, now the SMT pair of US 30 is NAS 100. You can see this is the NAS 100 chart. Now we will look for SMT divergence. The next step will be looking for an SMT divergence. So here you can see that in NAS 100 this was the low, okay, this candle, and the same candle was up here, okay, this candle. Now we will draw a line at these lows, and you can see that this low was swept in the US 30, and in NAS 100 this low wasn't swept. Okay, what's the psychology behind this? It's bullish because the price has just earned some stop losses and it will go up. Okay, the price has just gone down to hunt some stop losses and it will go up because in this pair this low isn't swept. Okay, and this is bullish. So now we have an SMT divergence. The next step will be finding a fair value gap. Okay, so on 5 minute you can see that this is the fair value gap, the gap between the bottom of this candle and the top of this candle. This is your fair value gap. Okay, this is the fair value gap. So what you will do is you will get an entry in this fair value gap, okay, here, and your stop loss will be below the recent swing low. Now as I said, you should target 30 handles. So from 254 to 64, 74 and 84 will be your 30 handles. So this will be your target. Okay, you can target more, but at least there will be a 30 handles pump. Okay, you can always target more. And same here, if there is a fair value gap you can get an entry, but you can see that there was no fair value gap in NAS 100, so you will just get an entry on US 30. You can always target more, but at least your target should be 30 handles. Okay, you should remember that. And for targets you should wait for the target. You don't have to close at 11 a.m. Okay, you should think that the price is not pumped and your target is not yet reached. You can wait. You don't have to close at 11 a.m. New York time. Okay, so this is how it works. I will show you one more example. So here is another example. This is November 10th. Okay, again 10 to 11 a.m. window. We will draw a line at 10 a.m. Okay, and we will draw another line at 11 a.m. New York time. So this is 10 to 11 a.m. window, and let's see if there is any kind of divergence between US 30 and NAS 100. So here you can see again that this was the low made on NAS 100. Okay, and the same candle above is this one. Okay, you can see this is the same candle, and you can see again this is swept and this isn't swept. As I said, this swept because it hunts some stop losses. It wants to hunt some stop losses and the price will go up. So if you get a fair value gap you will get an entry. So we will get an entry at this fair value gap. This time the stop loss is much tighter. Stop loss will be below the swing low, and again you can target at least 30 handles. So if you get an entry at 938, 958 and 968 will be your target. Okay, it seems a small target, but once you start trading on this strategy it gives massive gains. Okay, and this will be your target at least 30 handles. Okay, you can always target more. Usually I close 50% of my trade here and then I wait for these swing highs, so you can always target these highs. Okay, so this was all about my silver bullet strategy. I hope it makes sense. If you have any confusion, you can ask me. I have tried to explain it as simple as I could.